Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.exchange. This video I am shooting from a hill station called Nuwara in Sri Lanka. From next weekend, every weekend I have some workshop. Next weekend I have Bangalore, the following weekend Chennai, the following weekend Mumbai, then after that online workshop. So maybe for next 1.5 months I am too busy. So I thought maybe I can relax for some time. So that's why I've come to Sri Lanka. Now, coming back to the markets. Last week, the markets were very, very volatile. And the first 4 days, markets kept on moving lower. Even the budget was not as expected. It was one of the worst budget. Some people will say, sir, it is not one of the worst budget. It is the worst budget for stock market. But on Friday, the entire losses were recovered and Nifty closed at fresh all-time high. And that was really surprising for the bears who hammered the market because of the budget. So remember, budget or politics, sometimes it may have a limited impact with stock markets. So somebody was telling last year the best performing stock market was Pakistan stock market. So that's a different story. So now let us just come back to the market. We will restrict our discussion only for the markets. Number one, if the markets continue to move higher despite deteriorating fundamentals, that means that is definitely time to be very, very cautious. Now we are actually in that situation. So on ground, things are not doing better. There's a lot of unemployment. There are a lot of inflation, so a lot of problems. But stock markets alone keep moving higher and higher on a day-to-day basis. So this is definitely time to be very, very cautious. Now, if you look at the internals, also a little bit worrying. Normally, in a bull market, so cyclicals will be moving higher, defensives will be underperforming. But if the markets is somewhere near the peak, then defensives will be doing better, cyclicals will be underperforming. If you look at the last 1 or 2 weeks price movement, you see which are the sectors doing very well. IT sector is doing very well, they are defensives. FMCG doing very well, that is defensives. And then pharma is doing very well, that's defensives. Auto is reasonably doing well, although auto is not a defensive sector, but it's doing reasonably well, maybe because of some individual stocks like Tata Motors. But banking doing very, very badly. And Nifty fell for 5 continuous days, and Friday it recovered the entire losses made by those previous 5 trading sessions. However, Bank Nifty could not even recover 2 days of losses. So that shows that defensives are doing well, cyclicals not doing well. That means the upside momentum may not be very big. Now, if you ask me to put it in simple terms, from here the probability of market going higher is actually low. The probability of market going down is high. But at the same time, there is nothing to worry too much because the markets are not going to fall big as long as the retail people's money keep on moving to mutual funds. And the mutual funds are having hell lot of money to support the market. And the FIIs, sometimes they sell, sometimes they buy, so they are totally confused a lot. So therefore, at best market may consolidate, so that is my expectation. Now, if you look at technically 23,850 is the support. That is a major support. So that is where the technically Nifty became long. But if you look at the open interest, the 24,000 and 24,500 both are added huge open interest on Friday. So therefore it's very, very reasonable to assume that 24,000 is a major support and 24,500 is also a good support. So it depends how aggressive you are. If you are a very aggressive trader, you can consider 24,500 as a support, and if you are a moderate risk taker, 24,000 as the support. If you are a low risk taker, you can say 23,850 is the final support. If that is broken, then it is time to really worry. However, on the upside, because the markets are trading at all-time high, it's very difficult to forecast the higher level, but somehow I feel that for this weekly series, maybe 25,200, and for the monthly series, maybe 25,500, maybe the resistance. And of course, there are a lot of other factors, economic data, because this is the first week, manufacturing PMI, services PMI, and this and that, US jobs data, non-farm payroll data, and this and that will be coming. And then more importantly, more and more corporate results will keep coming. There are many good companies will be declaring the results. So therefore, the markets may even focus more on stock specific. So stock specific movements can continue. And the banking is the real worry right now for the bulls. Now, if you see this, markets are definitely at euphoric stage, right? Only on Thursday I shot a video by saying that now the market has come to the skepticism stage. In just one day the whole thing has changed. But however, I'm still holding the same view for the next 4 to 5 months. Why I'm taking 4 to 5 months view, not a very bullish view? Number one, valuations are very rich. Number two, cyclicals taking a rest, defensives are doing well. And number three, with this budget, even I speak to my friends, even the strong BJP supporters, they are also not happy with this budget. And many of my friends who are very strong supporters of BJP, now slowly they are taking a stance against the BJP. Now, there are 4 state elections from now to December. So whether this budget and other proposals will be reflecting in those state elections, and if that is the case, of course, mandate has been given to BJP and NDA, and they are going to rule the country for next 5 years. There is no doubt about it. But markets will start worrying, if they keep on losing more and more elections. So that is when market may not crash, but the thing is, people may not want to buy fresh at such a high places. On the other hand, the people who invested about 6 months, 1 year before, they might consider booking some profits. So therefore, overall, the upside is limited. So maybe another 500,000 point, not more than that. I think the maximum, Nifty may go to 26,000 by end of December, and not more than that. So anyway, so it's just my personal view. I can be wrong also. So there are a number of times I have been wrong. So that's why I always say, I have a right to be wrong, but this is my view as of now. So for this weekly series, I'm expecting 24,500 to 25,200. For this monthly series, I'm expecting 24,000 to 25,500. So fortunately, last month, whatever the range I forecasted, markets played out exactly the same way. So let us see whether we are lucky in the July-August series. So hope you enjoyed watching this video. Thank you for watching.